What's up, everybody? Good evening, all. How you guys all doing tonight? Everybody having a nice weekend? As always, guys, thanks for joining me. Thanks for joining me on what is going to be and what is sure to be another fun-filled, action-packed, educational, informative, game-changing live stream. Hope you guys all had a very nice weekend. We've got S&P futures pushing higher as the futures market opened up not too long ago, and we are pushing higher. We also had some interesting news, a test, company QDEL, a new testing kit. Okay. There's a lot of news headlines that are spreading about this QDEL testing kit that is supposedly going to allow for much faster manufacturing. So apparently some of the other tests that are out there for COVID, obviously we're talking about COVID-19, is a little bit more difficult to manufacture, to get out to the masses, and test results may take some time, but kind of FDA greenlighting QDEL over the last few days, and this stock has been just a monster ever since mid-March, when kind of all the COVID chaos kind of started. And I think we're getting, some continuation in the futures market on the S&P on the back of kind of the hopes of economy starting to open back up, some better test kits becoming available, a continued slowdown and decline in hospitalizations and deaths throughout the country, as the curve continues to flatten and some states start to open things back up, and the futures market is continuing higher. To be honest with you guys, I am completely shocked that we are at 294 on the SPY. I really am. I really, really am. We are staring down the barrel of 14.7% unemployment, which makes 2008 look like a kid's show. Now, yes, 14.7% won't stay there for long. But if anybody thinks that we're going to go from 14.7 back to 3.6, which is where we were prior to coronavirus, you're dreaming. Yes, the bulk of those jobs will come back, but a lot of those jobs are not going to come back. A lot of companies are going to realize that they could do just fine with trimming some fat and cutting expenses. And I think you're still going to be left with at least, I don't know, 5, 6, 7% unemployment after the economy opens back up. So, the fact that we're at 294 on the SPY, it's crazy to me. It's crazy to me. I mean, I know we have a ton of stimulus, an obscene amount of stimulus coming out of the Fed and coming out of the Treasury, and now they're talking about more stimulus and more checks to the American people. New Jersey has already extended their lockdown another 30 days, which I think is just crazy. But this is what's going on, and you are not getting paid to short the market. Believe me, guys, everybody was shorting the market in here. Everybody was, including myself. I was shorting the markets inside of that bounce, and it has not paid. It has not paid. I have not gotten paid to be short the markets. Yes, I've caught a couple of SPY put option trades here and there. But every time I try to hold an option overnight and I try to hold for a swing and a continued move, you're not getting paid on it. You're not getting paid on it. Even if the markets trade lower after hours, the futures market trades up, you get a gap up and it kills your premium on your option. And now we're just pushing higher. We're going to probably open up tomorrow above this pivot high, which is nuts. We're like 50 cents. I mean, I haven't checked the futures market in the last hour or so, but last time I checked, we were about 50 or 60 cents off this pivot high, which means that our next target, you're going to be staring the 200-day moving average right down you're talking about the 200 and the 100-day moving average are both sitting at 300. So I think that's going to be our next test, guys, is going to be right there. Okay, that's going to be our next test. You've got the 100-day moving average and the 200-day moving average that sit about 30 cents apart, just below that $300 area. So you're talking about $299.50 up to $300, and that's going to be our new area. All right, that's going to be our new area, especially if we gap above this previous pivot high tomorrow, which at the rate the futures market's going, very possible we could see us gap above that level tomorrow morning. Okay. So it's crazy. It's nuts. But you know, the saying is you can't fight the Fed. The saying is you can't fight the Fed. And that's basically, this is a stimulus backed bounce. You know, I actually added to some long-term portfolios. I actually added a few things to my long-term holdings on Friday that I was going to share with my TTG group on Friday, but I didn't get the confirmation from my wealth management guy at JP Morgan. I didn't get confirmation until after market hours had already closed. But I did actually enter a starter position in United Airlines and in MO. So before I start this live stream, I'll talk to you guys about two long-term portfolio ads. I told you throughout this entire process, I would tell you every time I add to long-term holdings. So what I'm going to do to start off this live stream is I'm going to give you guys a little update on my long-term holdings. Okay, I'm going to give you guys some update on some positions that I've added to. Then I'm going to take a blanket Q&A like I always do when I start my live streams, give some people to log on. I know a ton of you have a lot of questions. So I'll take some questions for probably about 45 minutes or so. I'll answer as many questions as I possibly can. Then I'm going to get into kind of recapping what were my best trades from last week. And we're going to talk about what to expect in the week ahead. Okay, I'm going to tell you guys what I expect to happen in the overall markets. Okay, so a quick check in on just an update. Okay, I've added to a lot of things over the last 2 months. My biggest holdings that I have added to, I've already shared with you guys on previous live streams when I added to them in the middle of March. In the middle of March, I added, okay, just show you guys. I added there and I added there. Okay, here are the two places that I've added to my tech holdings where the SPY was. Okay, so the tech holdings that I've added to, just to recap, like I said, I've covered this in previous live streams. I always share with you guys whenever I add to long-term holdings. So just to recap, my tech holdings, I have added to Apple, Amazon. But again, guys, I added to these in the middle of March. In the middle of March, I added to these holdings: Apple, Amazon, Google, Facebook, Microsoft, Disney, Qualcomm, NVIDIA, AMD. Okay. Again, I'll cover those one more time. The tech companies that I have added to, okay, if you guys want to jot them down, I've added to Apple, Amazon, Google, Facebook, Microsoft, Disney, Qualcomm, NVIDIA, AMD. Those are the tech holdings that I added to in the middle of March. Very happy with my ads on my tech holdings. I mean, guys, if you just pull up, some of these stocks, I mean, it's just insane. It's just insane what some of these stocks have done, the bounce that some of these stocks have seen. I mean, you're talking about me scooping these stocks up here and here. I mean, and now you're looking at where Facebook is. I mean, I'm very, very, very pleased with my long-term holding ads. Again, I'll go over a couple others. TNDM was another one that I added to. That one's back up to testing all-time highs. I added to Boeing at 106. Boeing, I added, I'm just recapping this, guys. Boeing, I added at 106 right there. Okay. I've also added to Starbucks in like the beginning of April. Starbucks, I added like in here. So I added to Starbucks. I also added to J&J. Again, guys, this is just a recap. I've covered this in previous live streams. I added to Home Depot. Very happy with a lot of these ads. Okay, so those were my early ads. Those were my mid-March, early April ads. The other week, I added to, because those are kind of my tech holdings, a lot of high growth names, some value plays in there as well. But I added to now a lot of dividend paying stocks. So now I'm looking at dividend payers. Okay. A couple weeks ago, I added to Chevron right here. Chevron pays a huge dividend. I added to OKE. Okay. Right in here. I also bought OXY at like 1260. Okay, OXY, OKE, CVX, huge dividend paying stocks, 12%, 10%, 9%. Big dividend paying stocks. And then I just also bought Altria. Okay, I bought Altria on Friday. Okay, I bought Altria MO. I bought Altria on Friday, another huge dividend paying stock. So that's what I'm looking for now. Now I'm looking for stocks that are going to pay me some pretty hefty dividends if the market is going to just kind of chop around for the next couple of quarters. I think that now that the bounce in the market is getting to the top end of that bounce, I don't think the SPY is just going to go back to here. Okay, so I think we're going to chop around for a while. I think we're going to chop around in this area for a while, and I think after all is said and done, a year from now, we could be looking at very, very small gains on single digit gains on the overall markets. So I would like to start to accumulate dividend positions, stocks that are going to pay me 6, 7, 8, 9, 10% dividend on my money, even if the S&P only gives me 5 or 6%. Okay. And then what I do with all my dividend paying stocks and my long-term holdings, I just reinvest the dividend. Every single, my entire, all of my accounts, I have like 5 different long-term holding accounts. All of my accounts that carry dividend paying stocks are all automatically reinvesting the dividend. Okay. So over the course of time, my position is just getting bigger and bigger and bigger and bigger and bigger for free. Okay. And I also bought United Airlines on Friday. Okay, I also bought United Airlines on Friday. Take you guys, here's United Airlines. Okay, trading at around $25. So I started, not a big position in the airlines. I just wanted to start to nibble on some. And I think United and Delta are the two best in breed. I like United and Delta a lot more than I like American. I think United and Delta are best in breed. Okay, so I started to nibble on airlines. Okay, I started to nibble on airlines. All right. So I figured I would just kind of update you guys with a few of my long-term stuff. Okay. I figured I would kind of just update you guys on my long-term stuff. And that's it. Okay, so those I added, like I said, UAL and MO on Friday. So that's kind of, I promise you guys, I would always update you whenever I add to a long-term holding. So there you go. There you have it. There's my updates there. And I'll continue to let you guys know. I'll continue to let you guys know I'm still fishing for for some high dividend paying stocks. I've still got a chunk of cash that I want to deploy into some high dividend paying names. So over the next, probably 2 weeks or so, I'll probably kind of put that cash to work. All right, guys. Nah, I haven't. I haven't added to any cruise lines, Mr. D. I haven't added to any cruise lines. I'm actually surprised. I'm hearing that, Carnival. I think it was Carnival or Royal Caribbean is like starting cruises back in August, and they're already like selling out tickets. So I think maybe it could be time to start to nibble on these cruise lines. Cruise lines and airlines, I think, are very, very similar. I'm not going all in on the airlines. I don't have any positions on cruise lines yet. Not to say that I won't, but right now I don't have anything. Okay, and I think you can maybe buy them in pieces. You don't have to buy, if you want to put a certain amount of money into them, you don't have to do it all at once. You can buy them in pieces. Okay, so that's it. All right, guys. So what I will do here for the first couple of minutes, is I will open the floor up for a blanket Q&A session, just like I always do. Give some people some time to log on. and we'll just start to fire away. All right, guys. So go ahead, guys. Fire away. Ask me some questions. I'm here for you. Thoughts on Moderna? Manuel says, thoughts on Moderna. I don't know, man. It's like, it's tough. Whenever somebody asks, like, oh, what do you think about one of these COVID vaccine companies? It's either all or nothing. It's either all or it's a race to who gets the vaccine first. It's a race to who gets the vaccine first. And right now, Moderna, is anybody willing to bet against Bill Gates? I don't know. Are you willing to bet against Bill Gates? I'd say you got a pretty good chance that Moderna is definitely one of the front runners with the news that keeps coming out regarding kind of their trials and their studies and the data coming out of that camp. But don't rule out any of the big boys. You've got a lot of big players, Pfizer, Merck, a lot of huge biotech companies that are also in the race. And one stumble in an FDA trial and it's all over. I think you just have to understand that, like, if you're going to really sink your teeth into one of these COVID vaccine companies, if you already have, I'm telling you guys this now, if you have over the last 2 months sunk your money into a COVID vaccine related company, whichever one it is, there is a lot of them. Okay, Moderna is not the only one. If you have bought a stock in March or April that is up 40, 50, 60, 100, 200% over the last 2 months because of vaccine related news, do not be greedy. Sell some of your position. All of these stocks are running on hype and anticipation of a possible vaccine. If they do not get a vaccine, or if their vaccine trial fails and the FDA rejects it, the stock is going to plummet. Please do not let yourself be up 100% on a position on one of these COVID-related vaccine stocks and not sell anything. You have to take some off the table, because if they don't get the vaccine, okay, Moderna stock is going to go right back to here. Okay, it's going to go right back to here if they're not the ones with the vaccine. And the same goes for any other biotech that has made a huge run over the last 2 months on vaccine-related news. All right, biotechs are tricky. It's all or nothing with these companies. It's all or nothing with these companies. Okay, they're either, if you're not first, you're last in the race to the COVID vaccine. Now, unless you're talking about a therapeutic like remdesivir with Gilead, that's not a vaccine. That's a therapeutic. That's a treatment for if you get coronavirus. All right, but these other ones like Moderna, these are races to a vaccine. And truly, if you're not first, you're last. Okay, so be smart. Don't be greedy. Don't just think that there's 20 companies that are all in a race for a vaccine. Don't just sink all your eggs in one basket and think that you've got the one, because you have no clue. You have no clue what's going on in that laboratory. You have absolutely no clue. Okay. So that is my advice to anybody that is long any of these stocks. So, somebody asked me my thoughts on mRNA. My thoughts are you need to be taking profit. That's my thoughts. My thoughts are, as this stock continues to push higher, you need to just take pieces of your position off the table, be happy with your profits, and lock it in. And then if they do get, and then hold on to a small piece in case they do get the vaccine, the stock shoots to 80. Great. You're still in it. But if they don't get the vaccine, the stock drops to 25. You don't want to be sitting in your entire position from 27 and look like a fool. Okay. So that's what I would suggest to anyone that is long any of these COVID vaccine related companies. Trader 33. No, I don't write covered calls. I don't write covered calls on my long-term portfolio. I just let my long-term portfolio just build. writing covered calls, it's a great strategy. I have no problems writing covered calls, especially if you don't mind getting long the stock even more. I don't think there's anything wrong. I think it's a great strategy. But when it comes to my long-term holdings, I just build my portfolio, and I just add to my portfolio every month, just like if I worked at a regular job, and every month they would take a piece out of my check for my 401k. I do the same thing with my trading profits. Each month, a portion of that money, it just goes right into my long-term portfolio. And then whenever there's situations where the market drops big, like obviously in March and the beginning of April, I added big chunks to my long-term portfolio. December 2018, I added a big chunk to my long-term portfolio. So just to remind you guys, this is when the Fed started raising interest rates. Okay, this is when we had all the China trade war. So it was like China trade war, China trade war, and then raising interest rates. So in here in December is actually where I added to my long-term portfolio in December of 2018. It's just guys, it's clockwork for me. It's like, okay, market drops more than 10 or 15%, I add to my position. Okay, I added to my position in my long-term portfolio right there in December. Every month I add to my long-term holdings, and whenever I get a big drop, like greater than 10 or 15%, I add more. And that's what I've done over the last, decade now. And it's worked out really well. And it's just what I'm going to continue to do for the rest of my career. Yes, XRP Gal asks, will the new additions in June allow me to paper trade? Yes. So, XRP Gal is asking, will the new additions to the website in June allow me to paper trade? Yes. So in June, we're adding a lot of new features to the website, as XRP Gal just mentioned in the chat. The features that we're adding in June are a trade simulator, so you guys can paper trade on our website, real-time level 1 data, access to a real-time level 2 subscription, and the ability to buy and sell directly from our website with the same software that they use on Yahoo Finance. So if you guys are on Yahoo, if you go to Yahoo Finance right now and you're looking up a ticker, you'll see it'll say like buy, sell right there on Yahoo Finance. It's a software that will take you straight to your brokerage account without actually having to open up a new web browser, and you can just buy and sell right from there in your brokerage account. So it's the same software. We're approved for it, and we're going to be implementing that on the website starting in June. That's why June our membership price is going to go up, because we're adding all these new features. So yes, XRP Gal in June, you will be able to paper trade on the TTG website with our own trade simulator, where you guys can actually trade with fake money, and you can practice right from the TTG website with real-time data. It'll be real-time data. You can buy and sell stocks, but it'll just be with fake money. Brian, what's up, Brian? Brian DeLea, what's up, brother? Says CODX tested its resistance level and the strong resistance level at 18, and it couldn't break 1580 small resistance level. Brian, I am actually I am long CODX. Okay, Brian, I'm long CODX. I don't know if you knew that or not. I don't know if your question, if you knew that I'm long CODX or not, but I am long CODX for a swing trade. If any of you missed my video, I posted a video a couple days ago. It talked about some swing trades that I had. CODX is my big swing trade that I'm in a full position on this CODX. I'm long from 1470. Okay, I'm long from 1470. If you guys missed that video, go back, check it out. I went over the full breakdown. There was my entry at 1470. I sold 25% of the position right there at 1562. I'm still in 75% of my position, looking for CODX to get above this 1580. This 1580 area is crucial. Okay, it's crucial. You can say here's 1 attempt, fail, 2 attempt, fail, 3, 4, 5 attempts. Okay, you're looking at now 6 attempts to break through 1580. We have still not done so. Okay. I'm looking, if this CODX can get above this 1580, it's got room. It's got room if it can get above this. This is a major resistance area that I'm looking for CODX to break above. And the reason why I think CODX is going to break above this level, guys, my target on this is going to be around $18 to $19. Okay, my target zone is going to be up in this region. You know, maybe we can get up and even test this 2170 area, but I'm looking for a move right up into this region. Okay. And the reason why I think we're going to break through this level is I like the way the stock is not shying away from this resistance level. And I want to show you guys the difference here. CODX, last time we tested this resistance level and failed, you see how the stock crumbled? You guys see how the stock just ran away from that resistance level? That tells me that buyers were scared of this resistance level when we first had that test and fail. Then we came up and we tested this resistance level again. But now this time, notice the higher low. Notice the higher low consolidation. Okay? I want you guys to notice how quickly the stock reversed to test the high again. And then I want you to notice the higher low consolidation. This type of price action is telling me that buyers are stepping up on CODX. Okay? So here is every single attempt or every single support level on CODX. Here was support level 1. We then stepped up to support level 2. We then stepped up to support level 3. We then stepped up to support level 4. And what I'm looking for now is come tomorrow or Tuesday or Wednesday, whatever it is, I'm looking for us to stay above this support level and break through 1580. And if we can break through this area, I think we've got maybe a 2 or 3 day run that I think you can see CODX put in like 3 or 4 consecutive green candles on the daily chart. Look for increasing volume to take us up towards that $19 area. Okay. But on that attempt, yes, on Friday, I was going to say yesterday, but on Friday on that attempt, I sold 25% of my position right there. Okay. And you guys can see this resistance level is real. Okay. There's your resistance pullback. Okay. There's your resistance pullback. So every time the stock gets up to this resistance level, it gets smacked right back down. Okay. But then every time it gets snapped back down, it's coming back. It's coming back. All right. So this really is one hell of a battle at this 1580 level. And, you know, those are my reasons why I think the stock is going to break through. And we'll see if I'm right. And I've already taken 25% of my position off the table. Like I said, I'm long from 1470. I sold 25% of my position at 1562. I'm still holding 75%. Like I said, looking for more. Okay. So that's my CODX swing. Yes, AGB Soccer, I swing and day trade in the same account. I used to have 2 separate accounts. I used to swing and day trade in 2 separate accounts, and it just became too much of a pain in the ass. So I just do it out of 1 account. Yeah, Joel. I'm not sure if it's Joel or Joel. I'm sorry if I'm totally butchering your name, dude, because I know you're in the TTG group. I think if I'm not mistaken, Joel, I think you just joined like a week ago, a week and a half ago. Yes, CODX has earnings on May 20th. I plan on being out of my position before that. I don't want to be in this. Like the only way I'm still going to be in this stock come May 20th is if the stock's already broken out and it's up at $19, $20 and I'm holding like 20% of my position. But if we're still below 1580, there's a 0% chance I'm going to hold the position going into earnings. I don't like coin flips, guys. I don't like coin flips. You know, going into earnings is a coin flip. You have no clue what that company is going to do, say. You have no idea what their earnings are going to be. You don't know what their EPS is going to be. You don't know what their revenue is going to be. You don't know what their loss is going to be. You don't know what their guidance is going to be. You don't know what the CEO is going to say on the earnings call. It's a coin flip. You might as well go to a casino and either put your money on red or black. And then with your luck, it'll come out 00 green. You lose anyway. I don't like coin flips in trading. As a trader, some people that don't understand trading say you're gambling. I'm not gambling. No, I'm not gambling. I have a very distinct advantage over most traders when I'm in there buying and selling stocks, because I have an education. I know what I'm doing. I was trained at a hedge fund. I've got an edge over the average trader that's buying and selling stocks. And I use that edge. I use that education to develop an edge on other traders to make money. All of my trades are very calculated, probability, statistical, shots where I say, okay, this is a high probability setup because of this. Okay. One of the things that you guys will learn more, I think, more so than anything else, I think that what you guys will learn being part of TTG is the ability to identify an A+ setup versus a B or C setup. Because just because you see a bull flag, for example, or you see a head and shoulders or a cup and handle or an ascending wedge or whatever pattern you want to come up with, just because you see that doesn't make it an A+ setup. I can show you an A+ head and shoulders, and I can show you a C head and shoulders. I can show you an A+ bull flag. I can show you a B- bull flag. And there's differences in those setups. And you guys will learn what criteria do you need to meet to say, okay, check, A+. Check. Ooh, nope, it doesn't have that. Check. Okay, that's a B setup. Check. Ooh, it doesn't have that. It doesn't have that either. Check. Okay, that's a C setup. And every piece of criteria that pattern does not meet lowers the probability of the pattern working out in a specific direction versus another. There's no pattern that works 100% of the time. It does not exist. The greatest setup you'll ever see in your life can sometimes fail. All you can do as a trader is say, okay, if this is an A+ setup, let's say maybe 70% of the time, it's going to do this instead of that. And you identify those setups. Okay, A+, that's where I want to be. You place the trade, you figure out your risk reward. Your risk reward makes sense. You set your stop loss, you set your profit target areas, and now you either get stopped out on that trade or you peel profits off when your targets are reached. That's it. That's what trading is all about. It's about identifying high probability setups, not just identifying setups themselves. Because like I said, I can show you 10 bull flags, and I'll give you a reason why that's the best one. And I'll give you a reason why that's the worst one. But if all you're doing is looking for bull flags, you're going to end up trading lesser quality bull flags where instead of maybe being a 70-30, the stock works out this way instead of that way. Maybe now the probability is 60-40. Maybe it's 50-50. And 50-50, those aren't the trades you want to be in. You want to be in A+ setups that more often than not are going to work out in the direction that they should. Knowing that nothing is going to work 100% of the time, that's why you have to manage your risk to the downside. But that's what you guys learn in all the courses. I think that's one of the biggest things that I've taken with me kind of from my days at working at a hedge fund is to be able to say that is an A+ setup, and here's 5 reasons why that's an A+ setup. Volume has a lot to do with it. Specific patterns, you need volume increases and volume decreases at certain points within a pattern. Okay, so like I'll give you a bull flag just for an example. Okay, a bull flag, when it puts in the flagpole, you want to see increasing volume. When it puts in the flag, you want to see steady decreasing volume. You also want to see when the bottom end of the flag is created and you have that uptrend support line, which is the bottom end of the flag, You want to see other indicators there. You want to see VWAP. You want to see the trade line. You want to see the 38.2 Fibonacci level. Then when the stock breaks out of the bull flag, you want to see, again, another increase in volume. That's an A-plus bull flag setup. Now, you can have situations where you can have a bull flag that gives you increase in volume when the flagpole is created, but then you can also still have heavy increase in volume during the flag consolidation. That is going to immediately downgrade the quality of that setup, because you should be seeing a steady decrease in volume during that consolidation flag. You should not see volume continuously increase during the flag. You should not see volume stay consistent during the consolidation flag creation. You need to see volume decrease during that flag consolidation. Then, like I said, you're going to want to see other support indicators line up with the bottom end of the flag. So if here's your flag, okay, here's your flag, this bottom uptrend support level, you want to see other indicators right here. You want to see VWAP right here. You want to see the trade line right here. You want to see the 38.2 fib level right here. And then once the flag comes to the inflection point and you get the stock breaks out of it, on that break out of the inflection point of the flag, you need to see volume pick back up again. Those are just, I'm giving you one example of a specific chart pattern, and every chart pattern from ascending wedge, descending wedge, ascending triangle, descending triangle, an equilateral wedge, a cup and handle, an inverse cup and handle, head and shoulders, reverse head and shoulders, bear flag, all of these setups all have very specific things that you want to see within that pattern for you to say, that's an A plus, head and shoulders, that not so much. And these are the things that will help you drastically in becoming a sniper versus becoming a machine gunner. You guys hear me talk about that a lot on my channel. Okay, snipers, they pick their shots. My average day consists of like 3 or 4 trades. On a busy day, I make 5 or 6. On a slow day, I make 1 or 2. I don't make 15, 20 trades during the day. I don't see 20 A-plus setups during the day. Sometimes I see 3 or 4, and those are the ones I go after. And that's what being a sniper is all about. Being a sniper is about waiting, being patient, and wait for that perfect shot, that perfect opportunity, which is the A-plus setup, rather than just firing at every target you see. So a machine gunner, if they see 10 bull flags, they're going to buy 10 bull flags. They're going to shoot at every single target they see. A sniper is going to see 10 bull flags, and they're going to shoot at 2 of them. The best shots that they get. And that's the difference between being a sniper and a machine gunner. You guys will learn all of this stuff in the courses. Let's see what else. I'm going to get caught up here. I've used both, Baba G. I've used both. I've used direct access and I've used the smart route. I preferred, I think, the direct access. I've used both, though. Henry says, how much is the course? Manuel says, I'm a cool dude. Manuel, thank you, bro. You're a cool dude, too. Thank you, Manuel. The wolf's not with me tonight. It's Mother's Day. He's got 2 kids. He's spending the night with his missus. I have no kids. So I don't have a mother to sell it. Well, I mean, other than my mother, but my fiance is not a mother yet. So, Jason's spending some time with his wife and his kids. So how much is the, all right, so Henry Sakaris says, how much is the course? So guys, I'll talk to Henry and anybody else that's interested in the courses. A typical course, our regular price for TTG, it's a 1-year subscription, get you access to everything. It's usually $1,665 for the year. Right now for the month of May, we're running a Memorial Day special for the whole month. and we're doing a 36% discount, so it's $1065. So for $1,065, you get a 1-year membership to TTG that gives you access to all of the courses. Okay, the beginner trading courses, advanced trading courses, beginner options, advanced options, trader psychology part 1 and part 2, and then how to thrive during a stock market crash. You also get 1 year of chat room access, which during the chat, during the day, I share my screen with you. I show you guys what I'm doing throughout the day. I'm on the microphone talking to you live, calling out every single thing that I'm doing before I do it. Big key factor there. Okay, I don't just surprise drop trades on you guys. I'm always on the microphone. I'm like, okay, guys, I'm looking at CODX here. This is the setup that I see. I think we could have a good swing trade opportunity here. If we can break through 1580, I like this area here, guys. I'm going to look to get long here, CODX around 1475. I'm going to look to get long here for a swing. Then 45 seconds later, bang, I execute my trade. The notification pops up in chat. And then you guys all know that I've executed my trade. Okay. You also get 1 year of text message alerts. If you guys can't be in chat, you can follow along with what it is that we're trading. Also 1 year of email swing trade alerts, 1 year of access to the premium blog, 1 year access to all of the courses, which I already mentioned to you, as well as all future courses. Every, I'd say maybe 2 months or so, I come out with a new course. You automatically get access to that course. No upcharge. There's no upsells ever in TTG. Once you're a member, you have access to everything. So all new courses, you get access to it. And then in June, I already told you guys we're coming out with all those new features: Trade Simulator, Level 1 real-time data included in your membership, access to a Level 2 real-time data subscription so you can have your Level 2 directly on the TTG site, so you don't have to go and use another third-party service provider that's going to charge you a fee. So we've worked out a deal with QuoteStream or Quote Media to give us real-time Level 2 data. And because we're buying it in bulk for our members, we can give it at cost. So we're getting it at cost from Quote Media, and then we're not upcharging anything. So if you went to them directly, okay, or a third-party service provider, they're going to charge you money and make a spread. So let's say if a service provider usually charges $40 a month for Level 2 data, you might go pay a third party for Level 2. They might charge you $100 a month. Okay, so what we're doing is buying bulk subscriptions from Quote Media and giving our members access to at cost Level 2 real-time data. So it can save you guys like 60, 75, $80 a month on Level 2 data. So that's another feature that we're adding to the website in the month of June. So the cost of the membership is normally $1665, right? That price is going up in June because of the new features that we're adding. And for the month of May, we're going to do a 36% discount by using the coupon code TTG36. Okay, so coupon code TTG36 will get you a 36% discount, and that'll give you a 1 year membership for $1065, which comes out to like a cup of coffee a day. All right, and you guys get access to everything, including the stock profile section, where we compile like analyst reports on whatever stock it is that you guys are interested in. Okay, you guys get access to all that. So Harry, 1065 that was the long answer. The short answer is 1065 for a 1 year membership with the coupon code TTG36. And what I usually do on my live streams, anybody that signs up tonight before midnight will get included a free one-on-one mentor session with myself. Okay. So anybody that signs up tonight with coupon code TTG36 gets a 36% discount and a free one-on-one mentor session with me. Yes, Mike, in June, the price is going to go up because we're adding a ton of new features in June. We're also launching a mobile app. I don't know if the mobile app is going to be ready in June, but we're launching a mobile app as well. I hope it's ready in June, but don't hold me to it. I'm not sure if it'll be ready by June, but we're also launching a mobile app as well. Where you guys can download it on Android or Apple, iOS, whatever. You guys can download the TTG app, which will give you access to everything right there on your phone, and you'll get push notifications like through the mobile app. It's going to be so sick. It's going to be so sick. I can't wait. I honestly cannot wait to launch the mobile app. for all the members. You guys are going to absolutely love it. So right now, Mike, it's $10.65. So if you sign up this month, it's $10.65 for the whole year. You just pay $10.65 now, and you have a membership for the whole year, and then you're locked in for that price. So when you renew your subscription too, you're locked in. So in June, the price is going to go up because of all the new features that we're adding. Okay. So again, guys, TTG36, use that discount code to get a 36% discount. Chris, I see your question. Chris says, Mike, what about a gap? How do you know when it will get filled? You don't know. You don't know, Chris. Now, gaps will tend to get filled. Gaps want to get filled, but you have plenty of stocks that give you runaway gaps, and the gaps will never fill. Gaps don't have to be filled. It's just that when a stock reaches a gap entry, the gap will tend to act as a bit of a magnet because you don't have a lot of shares that exchanged hands in the middle of a gap. Okay, so if a stock trades from $5 to $6 to $7 to $8, then it pulls back to $6, and it goes back to $7, and it goes back to $6, and then all of a sudden it comes out with news and it gaps up to 10. Then shares have never traded in between 8 and 10 now. So you have no shareholders that own stock between 8 and 10. And then let's say from 10, it pushes up to 11 or 12. So now you have shareholders from 5, 6, 7, 8, and then you have shareholders from 10, 11, 12. You have no shareholders from 8, 9, 10. So what typically happens is when that stock pulls back from 12 and then it gets below 10, that gap to 8 will tend to act as a magnet. Why? Because there's not a lot of supply between 10 and 8. So it's usually a lot easier for a stock to move in a gap because there's not as much supply. You don't have as many shareholders at those price points as you do 5, 6, 7, 8, and then 10, 11, 12. There's less stock that is exchanged hands at those price points. That's why sometimes when a stock enters a gap, either to the downside or to the upside, it can tend to act as a magnet. Okay, so when you see stocks that go bust into a gap, whether it's to the upside or the downside, look for that bust into the gap to be on a strong volume surge. If it's on a strong volume surge, bust into the gap, that's a sign of momentum. When a stock has momentum going into a gap, it's easier for the gap to get filled. Okay, now you also have to be realistic with your gap. Now, Chris, if we're talking about a stock that was trading at $35 a share, they come out with horrific news that sees the stock gap down to 6. And then over the next 3 months, it goes from 6 to 4. Then all of a sudden, 4 months later, it breaks above 6. It's not going to go back to 35. You have to be realistic with your gaps. Okay, you have to be realistic with your gaps. And what was the reason for the gap? Was the gap a massive fundamental catalyst that either destroys the company or catapults it to a new level? Or is it like a technical gap? Okay, you also that has a lot to do with how was the gap created, has a lot to do with will the gap get filled. All right, Chris. So I hope that helps answer your question. Nice, Rocky J. What's up, brother? Rocky J is a TTG member. Username JM in chat. What's up, brother? He says, Mike, Rocky J10 here, but in your chat room, I'm JM. I just completed the advanced course and the psych class. In one word, awesome training. Thank you for taking the time to do the classes. JM, it's my pleasure, bro. Or Rocky J10, as you are on YouTube. JM is your username in chat, but it's my pleasure, man. It's my pleasure. I'm glad to hear that you're enjoying the courses. Rocky, that material is the same stuff that I learned when I worked at the hedge fund. So when you're going through those courses, you are getting a simplified version of what I learned and what I was taught when I worked at a hedge fund in New York with almost $500 million under management. We had like 450, 460 million bucks under management. So that's how they taught me how to trade. The courses are a simplified version of what I learned literally working professionally on Wall Street. So I'm glad that you're enjoying the courses. It took me like 6 months to write those courses, man. I got to tell you guys, my sister's a teacher, and she has to write like her lesson plans, and she has to come up with like her lessons like for the year, especially right now with all the they're teaching virtually. They have to come up with all these courses, all these lessons. My God, it is hard. It is not easy. Like writing a lesson and writing a course, never mind a lesson. I mean, writing an entire course and an entire curriculum, it's hard. It's hard. It took me like 6 months to make those courses, Rocky. So I'm glad you're enjoying them. I put a lot of work into them, and I'm constantly coming out with new stuff. So over the next, 1 or 2 months, I'm going to come out with a new course. And like I said, like every 2 months, I try to come out with a brand new course. And as a member, Rocky, you immediately get access to the courses. You immediately get access to them. There's no upcharge. It's not like, okay, you're a member, here's a new course. It's $300. No. It's just like Netflix. When Netflix comes out with a new movie, a new TV series, a new documentary, you automatically, as a Netflix subscriber, you get access to that content. Same thing with TTG. As a TTG subscriber, when I come out with a new course, you immediately get access to that content. There's no upcharge. Okay? So again, guys, if you guys are interested in getting the courses and joining the TTG team, use coupon code TTG36 to get a 36% discount on a 1-year membership. And if you sign up tonight, you get a free one-on-one with me. Jersey Devil, thank you, man. Jersey Devil, another member, says you put a lot of work into those. I had to do lesson plans in college. Yours are, I just lost it. Yours are very well done, very professional, and easy to follow and understand. Jersey Devil, awesome, man. That was my goal. My goal was to take complex topics and complex information that I learned on Wall Street and simplify them so the everyday person can understand it. It's, guys, honestly, you do not need Wall Street experience. You do not need a fancy Ivy League education to understand this stuff. Trading can be very intimidating. Like when you look at a stock chart, it can be intimidating, right? Let's not kid ourselves. It can be intimidating if you don't know what you're looking at. It's just like a craps table. Okay, if you go walk into a casino, the game when they're throwing the dice. If you don't know anything about craps and you walk up to that table, it's extremely intimidating because there's a lot going on that table. There's a lot of numbers, there's a lot of words, there's a lot of colors, there's a lot of things going on that craps table. But once you learn the game, it's simple. Trading's a lot like that. Not saying that trading is simple, but once you get an education, all these things start to click. Like the stuff I'm saying to you, if you weren't following me in my CODX explanation, don't worry about it, because when you go through the courses, you guys will learn all that stuff. The Beginner Foundations course takes you literally holding your hand from day one. You've never traded a stock a day in your life and you want to learn. The beginner course starts you off right there from day one. Then the advanced courses, if you're an experienced trader, you can skip the beginner courses, go right to the advanced. That's the stuff that where we really get into the fun stuff. J-Code Fit, good question. J-Code Fit, good question. J-Code Fit says, hey, Mike, how much of pre-market activity do you take into account when watching stocks for the day? Anything more than just volume and gap? Like, what do you look at and how much price movement in pre-market? I'm going to tell you guys exactly what I do pre-market. Get ready, guys, because I'm going to share with you my entire pre-market process on how I select my watch list and how I decide what stocks I'm going to trade. First and foremost, first thing I do is leading gappers on the day. What stocks are gapping up and gapping down the most? That's what I do first. So let's say we use leading gappers to the upside. We'll start there. Let's say there's a stock, it's gapping up. or I have 10 stocks that are gapping up on the day. Great. I've got those 10 stocks that are on my leading gap scan. Now I take a look and see how much volume are they trading. I'm only interested in the stock that's gapping up if it's gapping up on heavy volume. I don't care about a stock that's gapping up with 50,000 shares traded. It means nothing to me. Okay? Not interested. But a stock that's gapping up with millions of shares traded, when the average trading volume on a typical day is maybe 500,000 or a million shares during the day, that's your typical trade during the day, and all of a sudden pre-market's traded 10, 12 million, bingo. That's what I want to see. Now, once I see volume, I take a look at what's the reason? What's the reason for the gap up? What's the catalyst? What's the reason? Is there a fundamental catalyst? Is there a press release? Did they just win a $25 million contract with the U.S. Army? Did they just get phase 2 FDA approval and they can move on to phase 3? Did they just receive a buyout offer from Google for $15 a share? Like, what's the catalyst for that gap up? If it's a fundamental catalyst that warrants the gap up, has my attention even more. If there is no press release and it's just gapping up for reasons unknown, I'm a little bit more cautious with that. The reason why I'm a little bit more cautious with that is because I want a stock that's gapping up to have an institutional bid. What an institutional bid means is there's been a fundamental change in the company. And you're going to have institutions come in and say, with this new fundamental change in the company, this stock is worth $15 a share. It's not worth 10. So when the bell rings and the stock's at 10, 11 bucks, you're going to have institutions come in and they're just going to sit there and soak up as much stock as they can below 15 because with this new fundamental catalyst, it's worth 15. When you have a stock that gaps up without a fundamental catalyst that does not have institutional bid, it's all day traders. It's people like you and I that buy it and sell it, and buy it and sell it, and buy it and sell it. And it's momentum traders that are chasing momentum on a stock that has a low float, that sees it make big moves because everybody's buying it and then everybody turns around and sells it back out. If there's not a strong institutional bid underneath that stock, it's going to go up and it's going to come right back down. Stocks that have institutional bid is usually when short sellers get into big trouble. The stocks that don't have fundamental catalysts, they go up and they come right back down. Why? Because it's day traders. Day traders buy it, and then day traders sell it, and then the day traders move on to the next stock that's in play. And then when the day traders leave, nobody cares about the stock anymore. There's not a true bid for that stock. There's not real buying in that stock. When there is an institutional bid, day traders can sell it all they want. Short sellers can sell it all they want. But institutional bid is going to just keep on buying shares. It's going to soak up the market at a specific price. And that is when you get short sellers, they get squeezed out. That's when short sellers get squeezed out. So that's another thing that I look for. Fundamental catalyst on that gap up. That's one of the things that I look for. Once I decide, okay, there's a fundamental catalyst, the next thing that I do, J-code fit, is I go and I look at the daily chart. I go and look at the daily chart and I say, where are my levels? I say, where's my 50-day? Where's my 100-day? Where's my 200-day moving average? Where's my key support levels? Where's my key resistance levels? And I say, where's the stock now? Once I identify a level on the daily chart, let's say $7 has been an area of resistance for the last 2.5 years. The stock has not been able to break above $7.50. Now we're gapping above to 8. Okay. Once I identify the levels on the daily chart, again, guys, this is my entire pre-market process. I'm literally giving you guys what I do pre-market every day with the TTG members. I'm really giving you guys like a free gift right now. Okay, so this might be one part of the video that you might want to go back, rewind, rewatch, and take notes on. This is my entire pre-market process. Once I identify those levels on the daily chart, then I go back to the pre-market action. If I saw 750 was resistance on the daily chart, I want to look pre-market and see, is 750 support now pre-market? If we're gapping up to 8, let's say it's 8:45 a.m. Eastern time, okay? Did the stock maybe pull back into 750 at 7:30, 7:45, 8 a.m., 8:30 a.m. Eastern? Did it test 750 and then bounce off of it? If so, I love that. I love that because now a level that I see on the daily chart, I'm getting confirmation pre-market. So the stock is, if I think I see a support level at 750 on the daily, and then I look pre-market and there's support pre-market at 750, well, that just confirms the daily level support that I'm looking at on the daily chart. So now that level becomes even more significant to me. Okay? That will then become one of my top tier stocks on my watch list. I break my watch list into 2 different tiers. Let's say there's 8 stocks on my watch list on the day, right? I break it into a tier 1 and a tier 2, or basket 1, basket 2. My basket 1 is going to be the 2 or 3 stocks that I like the best. And those will be 2 or 3 stocks that maybe meet the criteria that I just explained to you and I just talked about. Okay? The ones where I love the setup on the daily chart, I love the volume, I love the catalyst, everything I love. That's going to be basket number 1. Basket number 2 is going to be stocks that I still like, but I don't like them as much as the first 2 or 3. And right off the bell, for the first 15 minutes of the day, I do nothing besides look at basket number 1. So if I've got 3 stocks in basket number 1, all I'm doing is looking at those 3 stocks for the first 15 minutes. Now, I have a very specific game plan on those stocks. I say, okay, I think this stock is going to do this. I think the stock is going to open at 8. I think it's going to pull back to 750. If I see a nice strong bounce off 750, that confirms my support. I think it has room to 9. So when I'm looking at that stock off the bell and it opens at 8, it pulls into 750 within the first 6, 7, 10 minutes of the day, and then real quickly shoots back off that 750 level, goes right back to 8, and I go, there's my support. The stock is doing exactly what I thought it was going to do. I'm now looking for an entry. I pull the trigger, and we look for that move to $9. I stay very focused off the open. So that basket number 1, those 3 stocks have a very specific game plan. And I say, okay, which one of those stocks is my game plan coming to fruition? If I thought this stock was going to do this stock was going to do this, and this stock was going to do that. If all 3 of those stocks do exactly what I think they're going to do, I buy all 3 of them, or I short all 3 of them, or whatever I'm looking for the stock to do. But if my pre-market game plan comes to fruition, I attack. I don't try to look at 10, 15 different stocks. I pick the 2 or 3 I like the best, and I focus on them off the bell. If my game plan comes to fruition, I attack. Now, let's say 15, 20 minutes go by, all 3 of the stocks in my basket number 1, they're not doing what I thought they were going to do. Maybe that stock opened at 8, it pulled into 750, it bounces 765, and then it pulled into 725. I say, oh, okay, that stock's not doing what I thought it was going to do. Let's say if the 3 stocks I like the best in my basket number 1, all 3 of them are not doing what I thought they were going to do. Then I take those 3 stocks, I push them to the side. Now I take basket number 2, which maybe includes the other 5 stocks that were on my watch list. Right? Let's say, like I said, in the beginning of this example, I said maybe there's 8 stocks on my watch list. The first 3 are in basket number 1. Then those 5 are in basket number 2. Now, basket number 2, I still have a game plan for those stocks. I think this stock's going to do this. I think this one's going to do that. I think this one's going to do this, and so on. So after I get rid of basket number 1, I move on to basket number 2. Now I say, are any of these stocks doing what I thought they were going to do? If the answer is yes, I focus and I hone in on that stock. I look for an entry and I attack. If all of those stocks, none of them are doing what I thought they were going to do, I immediately take a step back. I drop down to first, second gear, maybe even put it into neutral. I let my scanner do some work, and now I do some searching. Now I start to scan. I'm pulling up ticker symbols. I'm looking around. I'm looking around. I'm scanning the markets now, looking for opportunity. But if everything on my watch list does not do what I thought it was going to do, I immediately scale the reins, pull the reins back on myself and say, it's time to drop into first gear, maybe even put it in neutral, let my scanner do some work today, because none of the stocks that I was looking at pre-market are doing what I thought they were going to do. That is how I stay focused in the morning. That's how I'm a sniper in the morning. I'm not a machine gunner. If you try to focus on 10 or 15 stocks in the morning, I promise you, you're going to miss opportunities in every single one of them. You can't focus on 15 stocks at once. You just can't. You just can't. So that's how I do it. I break my stocks into like a basket one and a basket two. So there you guys have it. I just gave you my entire pre-market process from start to finish. Okay? So J code fit. I hope that answers your question. Yep, Steven, my pleasure. Steven Arbor says, great color on your pre-market approach, Mike. Really appreciate it. Looking forward to another awesome day with the TGD fam tomorrow. Brother, I will see you in chat tomorrow. Oh, you're J Code. J Code, what's up, bro? Another TGD member. Another TGD member. Why is there sometimes a large spread on stocks? Question from Andrew. Why is there sometimes a large spread on stocks? It's just supply. It's just supply. The smaller the float, sometimes the larger the spread, because there's just not a lot of shares that are available for trade that are being held by public hands. So the smaller the float, the bigger the spread that you have, because you got to think of it this way. Let's say, and the numbers are obviously bigger than this, but for the ease of the conversation and simple math to follow along so we can make a point. Let's say you have a stock where there's 100 shareholders, okay, and the stock's trading at $4. There's 100 people that own shares. So when people come in to want to buy the stock, there's only 100 people that could potentially put shares into the market to sell. So let's say 80 of those people aren't even looking at the stock because they're not day traders. They're just holding on to their positions. So now you only have 20 people that are actively looking to sell their shares. Those 20 people, well, one person, let's say 5 people say, I'm going to try to sell my stock at 450. Another 5 people say, I'm going to try to sell it at 455. Another 5 people say, I'm going to try to sell mine at 465. And 10 people say, I'm going to try to sell mine at 475. That's all the stock there is that's available. So when you have people that come in to say, I want to buy the stock, they say, I'm going to buy it at 450. When the people that when they buy those people out at 450, now the next shares for sale are at 455. When those shares get bought out, the next shares for sale are at 465, and then 475, and so on and so on and so on. But when you have, let's say, for example, 1 million people that have shares, let's say 80% of them are not interested in selling their shares that day. They're not even paying attention. So 800,000 people are completely out of the way. Now you have 200,000 people looking to sell their shares. Now let's say 10,000 want to sell it at 450, 10,000 want to sell it at 451, 10,000 want to sell it at 452, 10,000 want to sell it at 453, 100,000 want to sell it at 455, and so on and so on and so on. So there's a lot more supply. There's a lot more shares for sale at a lot of different prices because there's more shares in the hands of the public. There's more shares in the hands of people that are looking to sell stock. And in those situations, the spread will be a lot tighter because there's a lot more people that have shares to sell. So it's just a supply issue with why some stocks have wide spreads versus why other stocks have much, much tighter spreads. Hey, Sandra, what's up? Sandra, you never miss a live stream, Sandra. You never miss a live stream. I love it. I love it. Jackson Rodriguez says, what's easier to trade, high cap or low cap stocks? I don't think one is easier or harder than the other. It just depends on what you like. You know, if you don't like volatility, then you're not going to like the small cap, low float stocks. But not every small cap is volatile, and not every large cap is not volatile. You know, Tesla is volatile as shit. Tesla is volatile as all hell. You know, so just because a stock is a large cap doesn't mean it has no volatility. Beyond Meat is volatile as hell. And just because a stock is a small cap doesn't mean that it's going to be volatile also. I wouldn't say that one is easier to trade than the other. I think it's when you receive an actual professional education, I think it's easier for you to take that education and apply it to different trading styles that you're comfortable with. Some people just don't like trading small caps. They're more comfortable trading large caps. Some people don't like trading large caps. They're comfortable trading small caps. It's personal preference, but you have to just make sure that you're receiving a professional education that works across various different asset classes, and whether it's a small cap, a mid cap, a large cap, an ETF, an option, a futures contract, you know, you have to make sure that it's an education that you can spread across to multiple asset classes and multiple trading styles. Oh, the wolf! The wolf is here. Ah, the wolf made it. Yeah, the wolf. He was. I figured he was spending some time with his wife and kids on Mother's Day, so that's why I didn't bother the wolf. But the wolf has made it, guys. The wolf is in chat. The wolf is in chat. Um, do I watch insider buying and selling? I mean, yeah. You know, yes. You know, it's important. You know, it's important to take notice of insider buying and insider selling. I think people that are on the inside of the company. You know, sometimes you can't take it um, as a clear buy or a clear sell because you don't know what you don't know what the reason is for it. But I think it's always worth paying attention to when insiders are buying or when insiders are selling stock. I think it's worth kind of paying attention to it. Let's see, what other questions do we have here? Nice, Grace Hatcher. Grace Hatcher says, Mike, your training is clarifying a lot for me. I got done with the beginner courses and now I'm halfway through the advanced. You do a great job breaking it all down. Looking forward to trading like a pro. Hell yeah, Grace. Hell yeah. That's what I'm talking about. Awesome, Grace. Awesome. All right, guys, I'm going to go ahead. I'm going to get the wolf on the phone. I'm going to get the wolf on the phone so he can join us here. Because the wolf is in the house now. I guess he's done with all the Mother's Day festivities. So he's ready to jump in here. I'm going to call the wolf now. Yes, H. Arca. H. Arca is asking, Mike, does your service come with option plays? So H. Arca wants to know, Mike, does your service come with option plays or only just day trading equities? H. Arca. Guys, I've got the wolf on the phone, by the way. What's up, Wolf?
Hey, what's going on, everyone?
So the wolf. H. Arca is asking, does your service come with option plays or only just day trading equities? So, H. Arca, we trade everything at TTG. Okay. I trade options. Jason trades like 98% of Jason's trades are options. And I'd say majority of the time, a lot of them are swing trades. We trade small caps, we trade mid caps, we trade large caps, we trade options, we trade ETFs, we trade futures. We even have some traders that trade crypto. Okay. The thing with TTG is that we have a lot of, it's not just me and it's not just Jason. We have other pro traders and moderators that are in chat that all have different specialties and different styles. So even if you don't like the way I trade, or if you don't like the way Jason trades, you guys can follow along with other traders and get value from other people that maybe their styles or the stocks that they trade more fit your comfort zone. Okay, so we do trade options, we do swing trade, we do swing trade options, we do day trade options, we day trade large caps, mid caps, small caps, we swing trade large caps, mid caps, small caps, options, ETFs, futures, we do it all. We do it all. We are all diversified traders, and that's something that I promise you will learn as a member of TTG is how to be a diversified trader. I promise you will learn how to be a diversified trader, because if you ever want to get to a point where you can trade full time for a living, you have to be diversified. You can't be a one-trick pony if you're going to do this full time. You can't just say, all I'm going to do, I'm going to trade small caps, because small caps get hot and small caps get cold. And you'll make money when small caps are hot, but then you're going to lose money and you're going to struggle when small caps are cold. And when you're trading full time, you don't have the luxury of making 50 grand one month and 2 grand the next month, or make 10 grand one month and then lose 7 grand the next month. You don't have that luxury. You have to be consistent with your trading, and your P&L has to have some level of consistency so that you can do this full time and know that every single month your bills are going to be paid. So that's why it's important for you to say, okay, I'm going to learn how to trade small caps. I'm also going to learn how to trade mid caps, and I'm going to learn how to trade options in large caps, because market environments change. Market environments change. So you may have small caps in the month of August. They may be dead. Zero follow through, zero momentum. Liquidity sucks. One and done moves, a short seller's dream. And if all you know how to do is go long small caps, you're going to have a really hard time. Meanwhile, earnings season may be off the chains. You may have monster, 20% gaps in mid caps because they blow out earnings. Or maybe you get some news headline with coronavirus in the month of June where there's a cure now and there's a therapeutic, and the SPY is exploding, and SPY options is making traders 200-300% in a single day. And you're going to be banging your head against the wall trying to trade small caps when they're dead, when they're totally dead. And the reason why they're dead is because there's better action elsewhere. And the professional traders are going where the action is. And you, being a novice, not being able to shift your focus and follow the money flow, you're going to stay in small cap land, and you're going to continue to try to fit a square peg into a round hole. You're going to bang your head against the wall for a month until all the pro traders come back to small caps. You need to move with professional traders. You need to be nimble. You need to be diversified. You need to be able to say, today, it's all about options in large caps. You need to be able to say, Boeing is in the news. Boeing got a bailout. Maybe they got approved for the 737 MAX. There's, they just got new orders from United and Emirates and all these other airlines, and the stock is on fire. You have to be able to say, I'm going to trade call options on Boeing today. You can't just say, okay, well, there's 2 small caps gapping up today. They both have traded 50,000 shares pre-market. One of them has a press release that they just updated their website, and the other just added a new member to their board. I'm going to buy that one today. You're going to struggle. You're going to struggle. You have to be diversified. Okay, you have to be a diversified trader. And that's one thing I guarantee you, that as part of True Trading Group, you will be diversified. So again, if you guys are looking to join the TTG team, become diversified, get a professional education, the same education that I learned when I worked at the hedge fund. Use the coupon code TTG36, and that'll give you guys a 36% discount Plus, anyone that signs up tonight gets a free one-on-one mentor session with myself. If you guys want a one-on-one mentor session with the Wolf, you can use coupon code TTGWolf36. Okay? So again, guys, if you want a one-on-one with me, a 36% discount, use coupon code TTG36. If you want a 36% discount and a one-on-one with the Wolf, use coupon code TTGWolf36. No, Naveen, you can trade from the same account. You can trade from the same account. It depends on your broker. Like you have to get approved for options trading. You might have to get approved for futures trading. It just depends on your broker. Naveen, I would just contact your broker and just ask them about if they have the ability to trade futures. No, Chris, I don't trade Canadian stocks. Let's see. Jason, if you see any questions you want to grab, just fire away. I'm getting caught up here on some questions.
Yeah, let me. I'll add to what you were just saying to that person about mid cap, small caps, whatever. Look, even if you're not trading the larger cap stock, a lot of people when they're starting out will trade the small caps, right? But at some point, you know that you're going to evolve as a trader, and the way to speed that process up and be more prepared is to just you don't have to trade them, but you have to watch what they're doing. I always say that you need to look at you need to follow different stocks in different categories. That way you know how to trade them. For me, like my small cap would be like U.S. Steel. My large caps would be like Roku, Apple. My mid caps would be like some of the airlines. That way you have a pretty good handle on what they're doing. And when you do decide to jump in, because you don't want to miss the move, you're better prepared to, have less risk and, the opportunity for more reward.
Yeah, good point. Good point. It just helps you guys like be more informed and also like what's going on, like market sentiment. Market sentiment. Like, are we bullish? Are we bearish? Are we in a consolidation? Like, you have to be diversified and understand what's going on in broader markets. You can't just be, oh, this stock only has 1 million share float, I'm going to trade this stock today, and be completely oblivious to everything else going on in the world. You're doing yourself such a massive injustice if that's your trading style. Now, I'm not saying there's anything wrong with trading small caps. I trade small caps when they're hot. But when the SPY is moving 5 points in a single day, I'm trading SPY options. When Tesla moves 100 points in a single day, I'm trading Tesla. When Beyond Meat blows out earnings and has a gap up, I'm trading Beyond Meat. When Twilio gaps up to an all-time high because they crushed earnings, I'm trading Twilio. When Apple breaks below a key support level and the markets are red on the day, Jason's attacking that thing with put options. When Jason thinks that the airlines have just been beaten down to death, like LUV just beaten down to death, and he's like, yo, this stock is going to bounce back up towards 27, he's buying call options. Like, you have to be able to know what's going on in the world to be a good trader and for you to grow, develop, and progress as a trader. Go ahead, Jay. You wanted to say something.
Yeah, and like Apple is a stock that every single person needs to learn how to trade, because Apple is pulling the market. Plain and simple. Apple pulls the SPY. The SPY pulls Apple. Like they seesaw off of each other. if you know how Apple trades and what it's going to do, and if it needs to cool down, then you have a pretty good idea. Like, that's what I use as my gauge. Like, am I getting into puts or am I going to be in calls today? Is Apple a little overheated right now? Maybe I should risk off with some of my call options because I think that there could be a rug pull.
Yeah, for sure. Yeah, all these indexes, they're all market cap weighted, guys. Like 5 companies make up, 25% of the value of these indexes. And when you look at like Apple, Amazon, Microsoft, it's like they make up the overwhelming majority. All these indexes are market cap weighted.
50%.
So yeah, if you don't know what Apple, Microsoft, Google, Amazon, if you don't know what they're doing, how can you know what the overall markets are doing if these indexes are market cap weighted? You have to be able to understand where opportunity lies. And that is why no matter what market environment we're in, if we're in a bull market, if we're in a bear market, if small caps are hot, if small caps are cold, if it's earnings season, if there's geopolitical tension, whatever the hell is going on, we could identify opportunity. Okay? Maybe there's something that's going on with the Fed and stimulus and something with the US dollar, and that's affecting the price of gold. Well, guess what, boys and girls? Jason and I are going to focus on some of the gold ETFs because that's what's in play. When we're talking about when President Trump is talking about an infrastructure bill, what does Jason do? He goes right to call options on US Steel X because he knows that if infrastructure bill and infrastructure spending is in the news headlines and we're talking about a $2 trillion infrastructure bill, what's that going to do to the demand for steel? What's that going to do for then U.S. Steel? And Jason goes and says, okay, I'm bullish on U.S. Steel. It's time to buy call options. But if you're not a diversified trader and you don't follow what the hell's going on and all you're doing is saying, this stock's got a 1 million share float, it's $1, I'm going to trade this today. That's all you know how to do. You're going to struggle when small caps are cold. Meanwhile, Jason is buying call options in U.S. Steel because there's an infrastructure bill. I'm shorting Tesla because they missed delivery because their factory is still closed. Jason Simmons in chat is buying Nugget, a gold ETF, because the U.S. dollar and inflation, it's a hedge against inflation. And all of these things, you guys have to be able to understand what's going on. This is just what I'm talking about. And this is something that I guarantee you will learn as a member in True Trading Group, is how to be a diversified trader. Next question, we got Bryant David. Bryant David says, I'm getting ready to sign up for the training, but while I tried to create an E-Trade account, I was denied and they mailed me a document. Am I doing it wrong or what? Bryant, I'm not sure. I don't know what the document is that they mailed you. I'm not sure why they denied you. Are you doing it wrong? I'm not sure if you're doing it wrong because I don't know anything about what they sent you. And I don't want you to share. I don't want you to share any of your private information on the stream. I would say just either contact them or just go try to open up an account somewhere else.
Yeah, try Schwab or something. It could be that you've got the same name of somebody that was in an SEC investigation. It could be something as simple as that.
Yeah, yeah, that's true.
I mean, look, I set up the E-Trade account for the Wu-Tang Clan, and they didn't have any issues. I don't think you'll have any issues.
That's funny. That is funny. But Brian David is getting ready to sign up for the training. Brian's getting ready to sign up. That's awesome. Brian, make sure you use coupon code either TTG36 if you want a one-on-one with me. Use TTG Wolf36 if you want a one-on-one with Jason. So again, guys, if you guys want the 36% discount on the 1-year membership, use coupon code TTG36 or coupon code TTG Wolf36 if you want a one-on-one with the Wolf. Let's see. Lucas G says, Mike, how do you scale out of a position and use trailing stops? Lucas, awesome question. Allow me to explain. So
favorite question.
Favorite question? So when it comes to tiering out of my positions, guys, I implement a tier trading strategy. It is what I teach all of our TGD members how to use. Okay. There is an entire chapter on the tier trading strategy in the advanced courses on the website. So, Brian, when you become a member, you're going to learn the tier trading strategy. Lucas, when you become a member, you're going to learn the tier trading strategy and you're going to learn it like the back of your hand. Okay. The tier trading strategy is something that I learned when I worked at the hedge fund to get in and out of very large positions. Okay. When you're working at an institution, you're dealing with multi 7-figure positions. Okay. Multi-millions of dollars in a position. You can't just buy and sell that in one trade. You've got to get in and out in pieces. So that's how I learned how to trade in tiers. Then when I thought about it for my own individual trading, obviously much smaller size than what I was trading at the hedge fund. Now with my own money, I just made little tweaks to that tier trading strategy so that it makes sense for my retail trading. The tier trading strategy is designed specifically to do two things, and it does both of those things extremely well. Any of our TTG members that are joining me on this live stream, feel free to comment in the chat. Let people that are on the stream know how much of a game changer the tier trading strategy has been for your trading. Implementing this in your trading is guaranteed to see an immediate impact on your P&L. Let me explain why. Tier trading does two things. It keeps losing trades small, and it helps you stay in winning trades longer. So if you suffer from either exiting winning trades too soon and then just keep on going, the tier trading strategy is going to drastically change your P&L. If you struggle from taking too big of losses, the tier trading strategy will drastically change your P&L. It's specifically designed to do those two things. How I scale out of my positions, Lucas. When I enter a trade, I identify 4 things. Stop loss, profit target 1, profit target 2, profit target 3. 4 things that I identify before I pull the trigger. Okay? So when I enter a trade, I have my stop loss, profit 1, profit 2, profit 3. And I stick to those 4 levels like clockwork. If the stock reaches my stop loss, I exit the trade, I take my loss, I move on. If the stock reaches profit target 1, I sell 25% of my position. What that is designed to do is to reduce your risk on the remaining position to make it easier for you to hold your position longer. So now, by taking 25% of your position off the table at profit target number 1, you're locking in profit, but you're also reducing risk on the back end of your trade. When you entered a trade, let's say, for example, you enter a trade, you're risking $500 on the trade. If you get stopped out, you're going to lose $500. When you take 25% of your position off the table, let's say you just put $150 of profit in your pocket, and now if you get stopped out, you're only in 75% of your size. So your original positioning was $500 risk. Now, if the trade fails and you get stopped out, you no longer have $500 risk. You're in 75% of your size. Not to mention, you've also already added profit. So now if you get stopped out, you're not losing $500, you're losing maybe $200. Okay? That makes such a massive difference in your P&L. It's ridiculous. The other thing that it does is now, if the stock pulls back or it jigs and it jumps and it just kind of shakes and bakes, okay, you can easily sit in that action and not be antsy to jump out of your trade because you've already pulled some profit off the table. So now let's say the stock goes to profit target number 2. When the stock reaches profit target number 2, I sell 50% of my position. Now I have now sold a total of 75% of my position. Let's say I bought 10,000 shares of something. Profit target 1, 2,500 shares come off the table. Profit target 2, 5,000 shares come off the table. At this point, I move my stop loss up. If your profit target number 2 is reached, you need to move your profit target now up. You can move it up to your entry price or just below your entry price, depending on the setup that you're trading. There should be a new support level if profit target 2 is reached. Now I'm still holding 25% of my size. Lucas, to your question specifically about using trailing stops. I don't use trailing stops because I manage my positions. The times that I do use trailing stops is if I'm in a winning trade and I need to step away from my computer for whatever the reason. Then I will set a trailing stop on my position. Okay? Other than that, I don't use trailing stops. I manage the trade myself and I take profits when my targets are reached. But now, after profit target 2 is off the table, I now look for profit target number 3, which is the real follow through, that real big continuation, and I'm still in 25% of my size. Now, prior to the tier trading strategy, you will be prone to sell your entire position at either profit target 1 or profit target 2. And then you see the stock continue. And you have 0 shares left. By holding 25% of your position, in case you get that real big follow through continuation, it keeps you in a winning trade longer. Now, instead of maybe making $700 on a trade, you're going to make $900. This is what the tier trading strategy is designed specifically to do. Help you keep losing trades small and help you stay in winning trades longer. You guys will learn the tier trading strategy and get to know it like the back of your hand and be comfortable implementing it by going through the True Trading Group courses, spending time in chat, doing one-on-ones with me, doing one-on-ones with Jason, going through that advanced course section and taking the tier trading chapter. Okay, this is something I learned at the hedge fund. I have tweaked and implement in my own personal trading. Again, any of our TTG members that are joining me on the live stream, I know there's many members that are on this live stream, comment in the chat. Let other viewers of the YouTube channel that are not part of the TTG community, let them know what the tier trading strategy has done for you and your trading and how it has helped you. So again, if you guys want to get that training, if you want to learn the tier trading strategy, okay, if you want to learn how to identify A+ setups and everything else that we discussed earlier in the stream, use the coupon code TTG36, get a 36% discount, and get access to a 1-year membership to TTG. You also, if you sign up tonight before midnight, you will get included with that a free one-on-one mentor session with myself to cover any topics that you want to discuss. If you want a one-on-one with Jason the Wolf instead of me, use coupon code TTGWolf36. All right, guys?
Yeah, I'm going to add to that because I love to. So Mike was talking about how I was in these love calls, right? If I wasn't using the tier strategy, so my first entry on the $27 love calls was $1.45, took profit at 2, pulled back, I reloaded, went back to 2, I took profit, reloaded again, it bounced around, and then we got caught in a headline where Warren Buffett sold, his position. I mean, the headline didn't bother me, but the market reacted to it, in a negative way, even though he had sold his position a month previous. So if I had just held my position and never took profit, I would have been out of that, pretty quickly and taken just a severe loss. Now, because I had time on that trade and because I had conviction in that trade, but mainly because I'd taken so much profit in the beginning, it allowed me to stay in that trade, fix my average, and now I'm up on the trade. And now we've got the momentum that I was looking for from the beginning. But none of that would have been possible if I wasn't cheering off profit from the beginning. So, you're going to get caught in headlines. Like, that's just a part of the market.
Yeah.
Especially when you're trading options. But if you've got time on those options, and we had 2 weeks, instead of bombing out at 40 cents, I end up making something of it, and now it's a very profitable trade.
Yeah, it was a sick bounce. It was a sick trade. Seth, great job. Seth McGregor, recent TTG member, made his membership back in 6 days with a $4,500 account. Seth McGregor, congratulations, made his membership in 6 days, trading small caps and options on just a $4,500 account. Seth, great job, brother. Great job. Lucas, was my pleasure. I hope that answered your question. Jason Hume, what's up, man? Jason Hume, I want everybody, give Jason Hume, thank you for your service, brother. Jason Hume, an Army Ranger, thank you for your service. Jason Hume says, Mike, you've changed my world. Army Ranger, H7 deployments. God bless you, Jason, and your family. Everything you're saying is right on. Went from 22 to 101 in 2 months. I love you. You changed my way of thinking. Hell yeah, Jason. Hell yeah, Jason. Congratulations, man. Congratulations. If anybody deserves it, it is you. Congratulations, Jason.
And don't mess with the Army Rangers.
Yeah, and don't mess with Army Rangers. Do not mess with Army Rangers.
No.
Jason, thanks again for your service, man. I really do appreciate you.
Ali Malik, does the monthly membership include all of the courses? Well, it's a yearly membership, and it includes all the courses. There are no upsells. Think of it like Netflix. You don't just get to watch 1 season of Ozark. You get all 3 of them. Right? 3 seasons?
Exactly.
You get it all.
Exactly.
From day one. And any new courses that come out, you get. We're not going to try and sell you DVDs.
Exactly.
Like some fooders out there. Where they try and get you in the door with like $200, and then all of a sudden, you're $2,000 into it, and you're like, "What the hell? I haven't learned anything." Right.
Exactly. And then you've got and then you have to pay another $2,000 to get like the courses. Yeah. So Ali asked, are the advanced courses included in the membership? So again, guys, when you become a member of TTG, you get access to everything. The beginner courses, the advanced courses, the beginner options, the advanced options, Trader Psychology 1, Trader Psychology 2, how to thrive during a stock market crash. You get access to all the courses. And then you immediately get access to all future courses. So I am constantly coming out with new courses. Like every 2 months, I come out with a new course. You instantly get access to it as a member. There are no upsells, Ali, ever. If you are a member and you join the TTG family, every piece of content that we have, you have access to. There are no upsells ever. What the Wolf is referring to, you have a lot of people out there that they say, oh, they'll charge you $1,000. They get you in the door. You've been there for 2 weeks. You've been there for a month. You're like, I haven't learned a single goddamn thing. And then they say, oh, well, if you want to become part of my inner circle and really find out and learn how I do what I do, that's $2,000. There's none of that nonsense bullshit with True Trading Group. And I don't like to curse on the YouTube channel, the live streams. I don't like to curse in chat. But honestly, guys, that is such BS. You get none of that with TTG. Okay? You have access to every single thing that we have available. You guys get access to everything. There's no upsells ever. Alan Beaumont says, can I ask with your strategy, what percentage of your trades are usually winners compared to losers? Alan, my win percentage over the course of the year is around 72 to 73%. In the month of April, I was like 80%. I traded very, very well in the month of April. That's higher than my average. I usually land around the low to mid 70s. Joey Pereira says, what courses should we complete before live trading? You should complete all of them, Joey. Or Joy, I'm sorry, Joy. Joy, you should complete all of them. Okay? I recommend you go through the beginner trading course, the beginner stock trading course first, then go through the advanced option. I'm sorry. Joy, let me rewind. I suggest you do the following in this order. Go through the beginner stock trading course, then go through the advanced stock trading course, then do trader psychology part 1, then do trader psychology part 2. Start trading on a simulator with fake money. Prove to yourself a level of consistency for at least a few weeks. Then you can start trading with real money. And then start beginner options trading course. And then advanced options trading course. And then you can take the how to thrive during a stock market crash course when you're finished. Okay? That is my recommendation for you on which courses that you should take before you start trading with live money. No, Big Bala. No. I mean, if that was a case, you'd have to avoid Apple. And Jason trades Apple all the time. Damn, Manuel, you're hard on me, bro. Manuel, you're hard on me, man. Yes. Jan 5 Guns says, are your courses suitable for swing traders being on the other side of the world, only able to trade the last 2 hours of each day? Yes, Jan, absolutely. You know, we make swing trades also. We swing trade. I'm not just a day trader. You know, I also do swing trade. Jason also swing trades. So even if you're not in chat, you know, you'll get text message alerts, you'll get email alerts every time I place a trade. And I specify if it's a day trade or a swing trade. So if it's a day trade, if you don't want to trade the day trades, you don't have to trade those. But you will get every single swing trade alert. Like for example, I bought CODX on was it Thursday? What day is this? I believe it was Thursday. Yep, Thursday at 1470. So I bought CODX on Thursday at 1470. So the last 2 hours of the day, you also could have very easily bought CODX in the 1470, 1460, 1480, 1470. It was there for a long time, for the entire afternoon, really. And then I sold a piece at 1562 on Friday, and I'm still holding the bulk of that position. I'm still in 75% of that size. So yes, the courses absolutely will, you know, benefit swing traders as well. And you can also still follow my trades, Jason's trades, and some of the other moderators in chat because we also do swing trade. Hassan says, how beginner friendly is your program and what do you recommend we should know before we do the program? Hassan, my program is extremely beginner friendly? Because we have the beginner and foundation courses that start you off from day one. You have no idea what you're doing. Literally, we help you open a trading account. We help you set up your charts. We help you learn the vocabulary and common terms and definitions. We help you understand how to place orders. We help you understand what is a stock. I mean, we literally walk you through from day one. We have a lot of members that placed their very first trade ever with True Trading Group. And then we have traders that have been trading for 20 years. We have actually, guys, we actually have a handful of brokers that work at Morgan Stanley that are part of True Trading Group. A handful of brokers that have been brokers with Morgan Stanley for the last like 20 years that are actually members of True Trading Group. So when you want to talk about diversity of member and experience, we have traders that have never traded a day in their lives and traders that earn very successful livings working at some of the biggest investment banks in the world, like Morgan Stanley, that are also part of True Trading Group. So, and we actually have a trader that lives in Australia who actually manages a fund. And I had a one-on-one with him just last week. And what a pleasure it was talking to him, because I love talking to, I love my one-on-ones. I love getting to know our members. And again, if you guys sign up tonight before midnight, you get a free one-on-one included. I love getting to know our members. And when I talk to this guy, he manages a portfolio. He has about 50 clients and he manages their money. And he's a member in True Trading Group. And it's just the coolest damn thing. So when you talk about experience levels, we have traders that have never traded a day in their lives, and we have traders that are managing millions of dollars. And that's the beauty about when you receive a professional education. It's for everybody. It's not a gimmick. It's something you can apply across multiple asset classes and various trading styles. It's awesome. It really is awesome. So again, guys, if you guys want to take advantage of the 36% discount, it's available for the month of May, where you can get a 36% discount. But if you sign up tonight before midnight, so you have an hour and a half left, sign up tonight before midnight, and you guys will get a free one-on-one mentor session with myself or Jason the Wolf. So if you guys want a one-on-one with me, use coupon code TTG36. And if you want a one-on-one with Jason the Wolf, use coupon code TTGWolf36. So Manuel says, how often do you stream? In chat, I stream every day. So as a member in chat, I share my screen all day long. I'm on the microphone. Jason's on the microphone. We're talking to people, telling them what we're doing, what we're seeing. That's all day long. On YouTube, I post video recaps every day of all my trades, and I'll do a live stream maybe once or twice a week. Yes, Vince Batista says, what if you can only trade small in the beginning due to small initial capital? Should we trade options? Yes, Vince, you should. Just because you have a small account, we have one member. I posted it actually on my Twitter. If you guys, actually, everybody go follow me on Twitter. It's Mike Edward _TTG. Mike Edward _TTG. Go follow me on Twitter. I just posted our members' comments. He started with like a $500 account. Actually, let me pull it up. I'll read you exactly what his comment was. Here we go. Okay. So we had one member. His name is Sean. I'm not going to give you his last name just for his own privacy. The guy's name is Sean. He might actually be on the live stream. He actually usually joins live streams. Sean, if you're on the live stream and if you want to tell people, be my guest. I don't want to say your last name if you're not comfortable, or I don't even know if you're on the live stream or not. But guys, Sean says in chat, and I put this on my Twitter, Michael Edward, I want to give you, Jason Wolf, and the whole gang at TTG props. I joined on April 7th. I went through the classes and I learned so much. I started my account with just $500 and my account today hit 2,600 in just 3 weeks. Mostly SPY option trades and small caps. FOMO was my biggest issue and you calmed me down. If it's truly strong, I'll get another crack at it. This has saved me from FOMO and is no more. Hearts for the whole team. So that's from Sean. So Batista, to answer your question, if you have a small account, should you trade options? There it is coming right from Sean. And what courses, what should you learn before you take the courses? You don't need to learn you don't need to know anything before taking the courses. The courses literally teach you every single thing you need to know to become a consistently profitable trader. From I have no idea what a stock is, I have no idea what an option is, I've never had a trading account a day in my life. It starts you from that moment all the way through to advanced option trading strategies. Okay, so that was from, I posted that tweet. If you guys want to go see the tweet, again, go to my Twitter page. It's at Mike Edward _TTG. And it's a tweet I posted on May 4th. If you guys want to see Sean's comments. All right, guys. All right, guys, I think that's it. What I'll do now, guys, is I will. Nice, Glenn. Nice trade, Glenn. Glenn Wilson, nice job. Bought CODX at. He bought 1,400 shares at 14.16 and sold out at 15.50. Nice job, Glenn. Nice trade. I'm still in it. I'm looking for us to break through that 1580 area, which has been a pain in the ass. Yeah, I'll post a link for my Twitter, actually, guys. Hold on.
I already posted one, but.
Oh, thank you, Jason.
I posted it 3 times.
Oh, you're the man.
Maybe True Trading Group could post my YouTube.
Let me see.
I need friends too.
Do you have a link? You have the link, Jason? Just post it in the chat.
I am. It does. You can't click it though.
Oh. What is it? Is it just the Wolf? What's it called, Jay?
It's Wolf of Weed Street, Jason Spatafora.
Guys, and also, if you guys want to go follow the Wolf on YouTube. So this is the True Trading Group YouTube channel. The Wolf also has his own channel he just started. Go give him a follow. Subscribe to his channel as well. It's the Wolf of Weed Street, Jason Spatafora. Yes. Oh, God, Kurt. Absolutely. Kurt says, is this also good if you live in Europe? We have members all over the world, Kurt. Kurt, we have members in Italy. We have 2 members in Amsterdam. We have members in the UK. We have a member in Singapore. We have 2 members in Australia. We have members in Canada. We have members literally all over the world. Nice. Jimmy Benson, welcome to the family, brother. Jimmy says, I've heard enough. I'm signing up right now. Hell yeah, Jimmy. Jimmy, I'll see you in chat tomorrow, bro. Send me a direct message in chat. Let me know that you're Jimmy from the YouTube channel. Say what's up. I'll introduce you to the whole group tomorrow. I don't have it published anywhere, Brian, but if any members that want to see it, my members see all my trades. Yeah, Alan. It's just a difference of style. I'm more of a traditional day trader that also swing trades. I trade equities and options. I'm a very technical trader. So like I trade off of technical setups and patterns and indicators. The Wolf is more specifically an options trader. He swing trades a lot of options. He swing trades options probably more than I do. And Jason is a lot more. Jason really is very good at feeling the heartbeat of a stock. So I'd say the biggest difference between me and Jason, I trade whatever's in play. So like every single day, I'll trade something different depending on what's in play. Jason is very, very good at stalking 1, 2, or 3 specific stocks, learning how they trade, learning and getting a feel for their price action. And then he focuses on those like 3 stocks and he just rips those things apart for like 2 weeks straight. So it's like Jason can go, an entire week and trade Apple options every single day. Jason can go an entire week and trade X options every single day because he stalks the stock, he studies it, he gets a good feel for it, and he has a very good feel for, okay, the stock's overextended, the stock's oversold, it's going to bounce, it's going to pull back. Like he has a very good feel for when a stock is running out of steam or when it's going to make a move, or when the trend is going to reverse, because he focuses on that stock for several days. I'd say that's the biggest difference between Jason and I. Would you agree, Jason?
Yeah, and we end up aligning.
Yeah, and then
when we do align, it's like a freaking home. It's like a grand slam, like Shopify.
Yeah, right. Exactly.
Andrew, I'm still in those Love 27 calls if you're wondering. We're in good shape. Futures ripping.
Nice, Manuel. No, it's my pleasure. It's my pleasure. Andrew, he says he thinks that the love calls are going to be in good shape because the S&P futures are up right now. So the market's higher right now than it was on Friday.
Yeah, and also, so Love on Friday announced that it did a lease back on a bunch of its planes. Got back like $815 million. And of course, what do the Robinhood traders do? They panic thinking it's bad news, and they dropped it down to 26.50, and it immediately bounces back up to 27, which is, it's just telling me like, there's a lot of strength going into it. And with the futures doing what they're doing now, and with all like the headlines with TSA pre-check up, Carnival Cruise Line just saw 600% increase in bookings because they announced they're going to reopen in August. I think transportation is going to be really hot tomorrow.
Yeah. I bought United actually on Friday in my long-term portfolio. DMCK says, DMCK is a member. What's up, DMCK? I'll see you tomorrow, bro. DMCK says, we usually get in trades even before Mike does because by the time he's done telling us what he's going to do, the group will get in. I know, it happens all the time. Guys, seriously, it happens all the time. Members get in trades before I do because I come on the microphone and I literally tell everybody what I'm about to do before I do it. So a lot of times people just react even before I do, even before I execute a trade. It happens all the time. That's it, guys. I think that kind of wraps it up here for the day. I mean, I was going to recap my trades in RVP, CPSH, and IZEA this week, which were some of my better trades this week. I was going to recap them, but we just kept on rolling with the Q&As. So, I mean, it's already, we've been on here for 2 hours already, so I think we're going to call it. I mean, it's another awesome Q&A session with you guys. You guys are awesome. Guys, so remember, you have an hour and a half left to get a free one-on-one. So if you guys want to join the TGD family full time, get all the courses, the same education I received when I worked at the hedge fund. You want to get a year worth of text message alerts, chat room access, trade alerts, the email swing trade alerts, stock profile section, premium blog, analyst reports, access to all the new features that are coming out in June. Use the coupon code TTG36 to get a 36% discount. If you sign up tonight, you get included a free one-on-one with myself. If you guys want a free one-on-one with the Wolf, use coupon code TTGWolf36. All right, guys? So that's it, gang. That does it for our live stream tonight. Another awesome Q&A session. We spent 2 hours on Q&A. That's insane. That's insane. I love it. What I want all of you to do right now, guys, is hit that like button for me. Subscribe to the channel if this is your first time here. And make sure you hit that notification bell so you don't miss any more of these live streams. And if I have not gotten to your question, if I did not get to your question, just wait a few minutes. This video will load up on the YouTube channel, and then you guys can comment underneath. If I did not get to your question, I'll come back and I'll answer your question, I promise. Okay? Frank Sabara, my man. What's up, Frank? Frank says, this is the real deal. I've learned so much in the last 2 weeks since becoming a member. Frank, I'll see you in chat, bud. Ashley Armstrong, I'm glad you enjoyed it. It was my pleasure. Thank you for joining me. Oh, yeah, dump Robinhood. I hate Robinhood. Robinhood is trash. Robinhood is trash. Nice. B. Smitty signing up right now. B. Smitty, welcome to the family. I'll see you in chat. Who else is signing up right now? Who else? We got B. Smitty. We had Jimmy. Who else is signing up right now? Nice. Great stuff, guys. Awesome. Awesome. You guys are awesome. Alan Beaumont is signing up. Okay, so Alan wants to know, because we also have a 2-year membership. So Alan, the TTG36 you don't need the coupon code for the 2-year because we're already giving you a 40% discount on the 2-year. So the TTG36 gets you a 36% discount. The 2-year already comes with a 40% discount, so you don't have to use the coupon code. So if you want a 2-year membership, it automatically gets that 40% discount off for you. And then we have a lifetime membership, which is a 60% discount, and that gives you 4 one-on-ones each year included with your membership, where we can review your trading and go through all of your trades and review everything. And lifetime members in TTG usually do 1 a quarter. So usually what I have members do for lifetime memberships, we connect our accounts to TraderView, and TraderView is spelled TraderVue.com, not BIEW, TraderVue.com. And I download reports from their TraderView accounts. So it gives me access to their trading, and I review all of their trading for a full quarter. So like a trader will trade for 3 months. I download all the reports from TraderView. I review all of their trading, and then we conduct a one-on-one. We go through their trading. We review it. We identify strengths, weaknesses. We identify things the trader can do better, things the trader is struggling with, and how to make little changes to fix those things. Then the trader will go 3 months trading with those new changes, with those new fixes. Again, I download the reports. I review all of their trading. We do a one-on-one, and we review it. So the lifetime membership comes with included 4 sessions where we do that. And you don't have to do it 1 every quarter. That's just what the majority of members are doing, because it's just the easiest way you have 4, so you might as well do 1 every quarter. So that's 1 every 3 months, and that's how you do your one-on-ones for the year. So if you're interested in a lifetime membership, that's a 60% discount with 4 one-on-one sessions included each year. A 2-year membership is a 40% discount with 2 one-on-ones included each year. And then you have the 1-year membership with coupon code TTG36 that gets you a 36% discount. And if you sign up tonight with TTG36, you get 1 free one-on-one mentor session. Yes, Alan, you can absolutely continue trading through TD. Yes. TD is good. There's nothing wrong with TD. Omar, what's up? Omar, welcome to the family. Omar just signed up. Mike Duraco, I'll see you in chat, brother. Have a good night. Have a good night. Martin Rodriguez is signing up. Yes, Martin, welcome to the family. I'll see you tomorrow. I'll see you tomorrow. Alan, my pleasure, Alan. I look forward to trading with you, Alan. Welcome to the family. Alfred Perez says, how long will the course take to learn? Everybody's different, Alfred. Everybody's different. If you sat down and you said, I'm going to just do nothing but just focus on the courses, you can finish it in a weekend. Most people take like 2 weeks. Okay, guys? All right, gang, that's it. I want to thank all of you for joining me on this live stream. As always, you guys were awesome. I love it. I'm going to go.
Mother's Day.
Yes, happy Mother's Day to any mothers that are joining me on this live stream. The fact that you are spending time with me on Mother's Day trying to learn stocks and to learn how to trade is absolutely incredible. I love your motivation. I love your dedication. I promise to be there every step of the way to help you reach your goals. All right, guys? Yes, B. Smitty just signed up. B. Smitty, welcome. Welcome, welcome, welcome. All right, guys? So again, anybody that signs up tonight gets a free one-on-one with myself or the Wolf. If you guys want the one-on-one with me and a 36% discount, use coupon code TTG36. If you want the one-on-one and the 36% off with the Wolf, use coupon code TTGWolf36. If you want a 40% discount on a 2-year membership and 2 one-on-ones, you guys can just click on the little box that says 2-year membership on the checkout page. Or if you want a lifetime membership and get a 60% discount and 4 one-on-one sessions each year, you just click on the box for a lifetime membership. It'll automatically give you the 60% discount. All right? That's it, gang. Thank you so much for joining me tonight. You guys are awesome. As always, if I missed your question, I tried to get through as many as I can. Comment once this video gets loaded up to the YouTube channel. Make sure to like this video, and I will see my TTG fam and all of our new members that just signed up. Welcome. I'll see you guys in chat tomorrow. For those of you that are still not part of the TTG family, Tuesday is TTG Tuesday. Chat room is open. For those of you that want to come and experience what a day in the life is like as a member of TTG, go to TrueTradingGroup.com, upper right-hand corner, click on where it says TTG Tuesday, fill out that form. You will get a link that'll give you access to our chat room for free on Tuesday. I'll see you guys in chat. Take care later, everybody. Have a great night.